Hello traders, welcome to yet another weekly Forex Forecast. My name is Gabriel Ojimadu and this is Straight Forex with Gabe. I will be walking you through the market occasions, market setups for January the 15th through to January the 19th and the trading opportunities we are looking to take on in the market. So as always, we'd like to start up with the economic calendar. If you traded last week, of course, you know this. We had CPI data. And this pretty much did not change the trajectory of the market. So I'll be also walking you through that to see what USD index holds or what the outlooks looks like, and also other opportunities in the market. Pretty much clear week. We don't have much of a data we should be worried about. Aside the normals, we have CPI data affecting Canadian dollar. We have Empire State Manufacturing Index affecting the USD. Of course, you know this starts on Tuesday. Much of bank holidays from Monday. We have on Wednesday, we'll see CPI data year in year on affecting the Great Britain pound, and then core retail sales affecting USD. Then on Thursday, employment change, unemployment rates, and then unemployment claims. And lastly, on Friday, we have retail sales and the prelim UOM consumer sentiments affecting USD also. So you see, we pretty much will be trading based on what the indicators are looking at and what the price action for that is looking like. So starting with the currency outlook, we see that CHF Swiss franc is still maintaining its strength, and then we have a new Great Britain pound also increasing in strength. New kid on the block is euro, and then we have NZD losing some strength there. USD gained some strength last week, but then AUD, Canadian dollar, JPY, these are looking to be my top pairs into the week. If you compare it with what we had from last week, I think it becomes much more clearer. Looking at Great Britain pound, you will see it gained some strength from a score point of 0.3 to 1.2. Looking at Swiss franc, we see it lost some strength there, but it's still the strongest for the week. From 3.2, it lost some strength to 2.6. And Canadian dollar, what we see from a strength of negative 1.1, now we see to negative 1.8. So this is really a good indicator that it's increasing in losing in strength. Okay, then we have Australian dollar from negative 1.2 to negative 1.5. USD still top on the short list from 2.0 to negative 1.4, but still strongly bearish. When we get to the chart, I'll also show you that. Then we have Japanese yen moving from 2.8, negative 2.8 to negative 2.4. So with those with these setups, my best positive pairs with the good net change is Great Britain pound Swiss franc, whereas on negative net change is Canadian dollar, Australian dollar, USD, and Japanese yen. So my best pairs to trade into the week at us, we have CAD Swiss franc. I'll look to short that. Australian dollar to Swiss franc short, Swiss franc Japanese yen, and USD Swiss franc. I'm looking to go long on that. Then Great Britain pound pairs, I'm looking at going long on GBP CAD, GBP AUD, GBP JPY, GBP USD. So these are my top pairs. If time permits, we'll also look at what we traded last week. We traded USD Swiss franc to the downside, Swiss franc Japanese yen to the upside, Euro Swiss franc, and then NZD USD, GBP USD. You see how these trades are still playing out. Some we had a very nice trade like the CHF Japanese yen, but most of the pairs on USD really did not go anywhere because of lack of volatility in the market, and lack of volatility means no opportunity. And of course, if you don't have any opportunity in the market, it also means that there is no risk. So the markets really did not move last week. So that is not giving us the needed volatility in the market to make money. So who knows? Probably this week we'll see new money pumped into the forex market, and that creates the needed volatility, yeah, increasing risk, and that also increases the opportunity for us to cash out from those volatility. So let's go into the charts and explore the market. Starting with dollar index here, you see on the dollar index, we see that this market is still structured to the downside. Now, let's looking at it from the daily chart. On the H4, you will see it clearly, but then here clearly we see that we having like a strong resistance here, and from last week's CPI, which did not go anywhere, you see, was unable to break this last high. So I'm looking strongly that we will, if price begins to break the market, the price action at those points, then this is a good sell. Well, like I said, the dollar for me is still a strong sell. It's positioned to be a good pair to short in this period. So if market breaks through this path, this will be a very big confirmation. But putting USD as a weak pair with other pairs that I've highlighted, we will see bigger opportunities as we trade into those markets. So let's get into the best setups for the week, and we're starting with Canadian dollar, Swiss franc, CAD, Swiss franc. Just a moment, let's get it out. So CAD Swiss franc is the first pair we're analyzing today, and we're looking to go short on it. So I don't know how many of you can remember, this is one trade I told you is going to be a long-term trade, and not just long-term, but I'll be bringing you up to speed each time we have a setup, a setup on it. So you recall that I told you from February 2023, this is a big opportunity. We're going to be trading this all the way down to 0.6132. I don't know. Can you see that all playing out now? Well, we had that needed breakout sometime close to the end of the year. We kept waiting for this. It broke out, just kept rigmaroling around this previous support, now turned resistance. Well, that we finally got the breakout from there, and now market is setting up for continuous breakdown to our profit targets, because this channel has been violated. So I see an opportunity there. This week again, we took this opportunity close to the end of the close of the year. Look at that. Now we are seeing new opportunities emerge again. So this is a descending triangle. So once we see the break from here, this key level, then we're targeting the 0.6302 level. Some of you have other trading strategies. Well, mine is to give you the direction, the bigger picture of it, so you can use your entry modes or entry strategies to now trade it. So if you are within this triangle, you could find some new entry scalping opportunities within it, but ultimately this is our goal. We're headed down to 0.6302 level. Okay, so next on the list is Australian dollar, Swiss franc. Let's find it and get it out. Australian dollar, Swiss franc. There you are. So we're also looking to go short on this trade. Now, if you look at this trade, you could let me give you the picture, the bigger picture here. Sorry about that. So on the daily chart, this is what you could get, but I didn't want to, make it more complex by adding this channel, because you see structure to the downside is just going down on a slow-mo, yes, if we could use that word. But then clearly here, I didn't want to make it more cumbersome giving you all of that, but what I can show you here is that nicely and slowly we're headed to the target, which is 0.5633. It's about 57 pips or so. Last time I measured it, good, you see, 73 pips. So you have your worst case scenario, which is around 171 pips. That's my stop loss level. So if you're trading this, you may need to go down to lower time frames, all right, and pick stop loss at certain key levels, such as this. But I have different strategies I use to trade this kind of setup. But mine is to give you that we are headed down to 0.5633 level. But then you can see that we have some opportunities for price to make a retest of the upper boundary of this channel. Okay. And if we're able to break below this, now, if we're able to break below this level, let me mark it again. Now, this will present us a wonderful opportunity again, all the way down, all the way down to, the lower boundary, because what that will imply is that we now have a new uh nice set of targets on the daily time frame. Something like this, we'll be heading all the way down to this point. You will see it will correspond to the lower boundary of this channel. So this is our next target. It's a textbook trading. You could just close your eyes and enter a sell, while take into consideration that we could have a retracement up to this level, but this particular market is going down. All right, I like the setup. It's been having this structure to the downside for as long as March 2022. So the prediction is almost certain that we're going all the way down, except something else changes this trajectory. Next on the line is Swiss franc, Japanese yen. We traded this last week. I don't know if you did, but it was one of the best trades from last week. So we cashed in over 100 pips, 200 pips. Let me look for it. Where are you? Where are you? Where are you? Where are you? Aha, there you are. So this was a fantastic trade from last week. This was where the week started, and we made it to we took out the profit target, which was 113 pips. Price rallied even as high as 176 pips. If you recall, last week I gave you the levels. I told you use the Fibonacci. Anything close to 50% Fib level, that will be the area we're looking to enter this trade. It didn't really get to 50%, and so if you entered within around that zone, let's say you enter from 38 Fib level, you see you could have cashed in about 156 pips. So right now, again, we're using Fibonacci to predict where the retracements could get to. Well, it has crossed 50. It's right now at 61.8. So another fantastic place to enter this trade and target the last high, which is 171.45. If you're entering this trade from here, this could fetch you some 156 pips again. Okay, so but we could still have it run all the way down to this trend line. So this trend line has adjusted a bit, you see that. So we have support. So we could have this also finally come down to here, but we don't expect it to break the last low, the 100% Fibonacci ratio, okay, to violate this level. So no. So we're looking at price taking off from here again all the way up to the 171.45 level, okay. And last pair on Swiss franc is USD Swiss franc. USD Swiss franc. So this is a trade we've been looking to go short on. I called this trade last week, but you could see it really did not go anywhere. So if you started the trade somewhere here, yes, this is where the trade started, went down 25 pips, went up 76 pips, finally came down, okay, almost at equilibrium, went back again on Friday. 42 pips. So we're still looking to short this trade. I'm still in on this trade. You could see I traded this trade using my robot system. So 1, 2, 3, still closed in profits. Okay. So, but this is still on. This trade is still on. I'm still looking to short it all the way. But you could see the key levels here. So this is a very key level, 0.8577 level. Okay. 0.8577. So you can see that it corresponds to this key level here. So put that in perspective as you trade. So that's it. So that's the last pair for Swiss franc pairs. Let's jump on to Great Britain pound pairs now, starting with GBP USD. On GBP USD, we also called on this trade last week. I called for this trade. We're looking to go rally on this trade. And what did we get? We're able to trade it all the way to, it made us some it made some rally, yes. From the start of the week, we cashed in about 77 pips, but well, it didn't achieve its full potential because the potential or target for the week was 1.2825. All right, so this is still the target for this week. I want you to take note of this adjustment. Look at this. So take note of that. We could get the bounce from here before we finally push up to 1.2825 level. So we're buying 75 pips into the target, I guess. Yeah, around, okay, 85 pips. Then next trade we're looking at is GBP-AUD. So let me get it out here. GBP-AUD, where are you? There you are. All right, GBP-AUD. Well, this trade, I won't be going in on it just yet because if you look at it from D1, it's structured to the downside, clearly so. But then everything is looking like we are potentially going to have a breakout and a reversal. So I'm giving the levels now. See, we have a very nice double bottom here. We broke out from this. Okay, we have smashed past the last high. So it's breaking all the laws of a downtrend. Okay, all the laws of a downtrend we see here, price is violating all of them. So right now, the last high has been violated. What we're waiting to see now is that the previous high also here will be violated, and then the final one, which is the one I marked here, 1.9262, also once it gets violated, you also see that the channel has also been broken, and that will set us up for new rallies. Okay, that will set us up for new rallies to the upside. So whenever that happens, we will wait to see. We'll wait to see, but let's mark it. You see that is corresponding to a key level. So this is really instructive that potentially this is going to happen. So we'll see. What else can I say? I'm not a prophet of Forex, but all I see is the numbers, and the numbers are showing where next the market is going to. So next on the line, GBP Japanese yen. Great Britain pound, Japanese yen. Now this is a great one, and not hard to see that potentially we're headed to the upside. So we have a nice zone here, which is a support, resistance, support, resistance, support, resistance, broken resistance now turning to a support. I hope you're seeing all of this structure. So I'm not just doing market analysis, but also teaching you exactly how to gain independence in your trade. So if we're to walk by the structure, the price action here, this will be the first stop. This will be the final stop, yes? But then I just want to be conservative. So my profit target is going to be the last high. It's going to be the last high, which is 188.36 level. So if you look at it on the higher time frame, it's clear to see. Now, clear to see in the sense that we have the rally, new high. What did we get here? New low. New high higher than the previous high. Did we get a low lower? No, this low is higher than the last low. What next did we get? We got a new high here. Did we get a low lower than the previous? Now you see it's no. So this low is actually lower than the last low. So what we're seeing here, we now have a breakout from the last highs here. And I believe this is heading to the, it's going up. So this is a very star trade. I would like to keep my eyes on this to see, go down to lower time frames, because we're almost getting the bounce, that needed bounce here. Okay, we're almost getting that needed bounce here. So once it goes down to the lower time frames, you begin to see the structure there. Just a moment, let me just try to show you again. Okay, I like doing this. So just to teach my students exactly how to go about this, or how to spot opportunities. So you could see by going down to lower time frames, you begin to see the opportunity. So once market breaks this structure, we're now back in the dominant trend, and that informs us to trade upward. So this is a fantastic setup. GBP JPY, I would like to keep my eyes on it. And then we have GBP Canadian dollar, Great Britain Canadian dollar, GBP Canadian dollar. Let's just get it out here. Where is it hiding? Just a moment. Oh gosh, distance can hide. Yeah, there you are. Okay, GBP card textbook upward structure. So look at it on daily, you may not see it clearly, but then on H4, which we're trading, we are to the upside. Everything points, we have a reversal here. Double bottom, we have a reversal here, so new structure to the upside. We're smashing through all the previous highs, violating it. So last low, new higher low, new higher low, new higher low, new higher highs, new higher highs, new higher highs. So immediate target for us here is about 63 pips, and that's the 1.7145 level. Okay, so traders, this is where we're going to draw the curtain. This week promises. I believe this week we're going to have volatility back into the market. The year is back in full. Traders are back on their trading desk. We should see those volatility, which has risk in it, but then how can you make money without risk? So traders, thank you so much for joining us, joining me this week. I want to see you next week again with good reports. And don't forget, apply good money management, good risk management to your trade. We're here to make money, not lose money. All right, take care. Don't forget to subscribe, hit the like button and the notification, okay, to see some specialized videos that I'll start making. I got your request. I forgot, I didn't mark the name again, but you requested for a Fibonacci video. I'm in the works working all those specialized videos. So don't just hit the notification button so that once those videos drop, you will be the first to know. All right, till next week, have a great week ahead. Bye-bye.